the vaccinations were such a key part of everyone's strategy, and now that we see a variant that overtakes that, does it concern you?
Yeah, well, risky asset performance and valuations in particular, they have been fast forwarding the economic recovery. And the economic recovery expectations, they depend on vaccinations, the progress on vaccinations, and also the related reopening. Now, will the Delta variant, which is one of the risks to the global economic recovery, but will it really derail economic growth? On a global level, I would say it depends. It depends on the still challenging battle between infections on the one hand and injections, which are hopefully effective against a Delta and any other virus mutations that might come up on the other hand. So on a global level, the economic consequences to date might be limited given the progress in vaccinations that we have seen, particularly in the developed markets. But on a regional level, some countries may fall behind the curve. Those countries, particularly in Asia, that have not made up with their vaccination strategies, for example.
Ann-Katrin, what does it mean for, if you can no longer find value actually in cyclical stocks, where do you look for the next big thing? Do you look at value stocks, or do you have just to look at Asia because they have a better control of the virus?
Well, I think at this stage of the cycle, it is generally advisable to broaden out the portfolio also within equity land. And in terms of regions, we continue to like Europe at the moment, given the expected cyclical recovery, which will at some point outpace or at least last longer than in other regions where we reach peak momentum, such as in the United States. And in terms of sectors and styles, we continue to like value and also financials, European financials, for example, because they should do well in an environment of ongoing reflation, which we foresee for the time being.
Right. Ann-Katrin, you mentioned peak momentum. Of course, we're right now 1 day left in the first half of the year. In the second half, does that mean returns are going to be quite limited?
Well, when I look at return potential for equity markets, for example, I think the source for returns will be rather earnings than any kind of multiples expansion, given the fast forward movement that we discussed already. I think investors, apart from the Q2 earnings seasons, which is about to start soon, will clearly turn their eyes towards the projections for earnings in the second half of this year. And earnings momentum could roll over, as well as economic growth forecasts could roll over, given the very high expectations. So currently, markets are kind of priced for perfection, with analysts embracing the best of all worlds in their earnings and growth forecasts. So against that backdrop, there could be potential for disappointments as we head into the second half of the year, particularly in the United States, where peak momentum might have been reached, while there seems to be a bit more catch-up potential in Europe, in my view.